Welcome to the Swing Trading with Cycles channel. It is November 26th. We are going to do an update on the Dixie index today. We're going to look to see, is it declining into a 3-year cycle low? And just as a reminder, we're all about data-driven analysis on this channel. We use price action, so focusing on open, high, low, close, looking at that on multiple time frames, right? That's the time machine element of it. How are we able to anticipate what's going to happen on the monthly by looking at daily and weekly charts, for instance? And if you're not familiar with some of those foundational concepts, you should see a link come up in the upper right hand corner now. Get a sense of some of those really important concepts, swing highs and swing lows, for instance. And we use cycles to tie it all together. You should see another link up there to look at the Cycles 101 content. If you haven't, that's going to be important as we talk through it in this video. I'll assume that you've seen some of that content. And so let's get into it. For the Dixie, we're going to look at 5 things today. So the first is a daily cycle update. On the Dixie itself, we're going to do a weekly cycle update. And then we're going to look at some levels for UUP, which is the ETF that tracks the Dixie. I have some puts there. It's an active trade I have, very high conviction. I've already been in there, been out a little bit. So I'll talk about that a little bit to see how the levels are correlating. And then we'll look at the 3 most important currency pairs that make up the Dixie. So the euro, the Japanese yen, and the British pound. Those 3 currencies combined make up about 82% of the index. And just to be clear, the euro is by far the largest weight. It makes up 57% of the index. So understanding how those are looking is going to be pretty important. That's the sort of counterbalance to how the dollar is doing. And then finally, we'll do a 3-year cycle update to tie it all together. How does all of this feed into the bigger picture, which is really in a large degree a 2023 outlook, because the 3-year cycle would be over at the beginning of 2024, just about there. So really, if we're in decline, it means we're going to have a rough year for 2023. So we're going to kind of look at that. So let us jump into the charts. We'll start with the daily cycle update as we talked about. And so this is one where, as we've been talking about in previous videos, we've been having these like short little cycles. So I'll take the crosshairs off here. So like we had this cycle here that was 15 days. So it topped out on day 11. So you had an 11-day rally and a 4-day decline. Then you had this little 13-day rally, 4-day decline. Then you had this 5-day rally, but like an 8-day decline, right? So that's interesting. Things start to shift, right? You have a shorter rally than you do a decline, and you have a longer decline. And this is the big one. I talked about this when we got down from, like, let's see, I think it was about a 6% drop from like right there, right? So like from this to here, which is about 6 trading days, we dropped about 6%, which is a huge drop, especially for, a currency, especially the world reserve currency at that. And after that, we just kind of we consolidated that next day, and then we made sort of what looked like a capitulation low. That would have been day 12 of this cycle, right? So 5 days of rally and then 7 days of decline. And now we then had this little feeble 4-day rally, right? That topped out on, what is that? Monday, November 21st. And now we're declining again. Notice what we just did. We have not made a new low yet, but I suspect that's what's coming next, right? To be clear, this is a downtrend, right? Let me just draw that really quickly so that is clear, right? So we made this move up, then we made this move down, then we made this move up, which is a lower high. That's a lower, really that's a lower low, that's a lower high, that's a lower low. Now that's actually a higher high, and that's not a lower low. So technically right now we're in a range until this, like you can kind of see it. This is creating some kind of like zigzag range here until we break down below these lows or break above these highs. And as I've been mentioning in these previous videos, even if we broke up, like what we really need to do is take out this high here and then the high from this candle here. So we have a long way to climb. And again, this is a very classic downtrend. So if you think about the math on this, this has rallied for 4 days, and we've now declined for 4 days, right? We had this, and really this was an inside day, but then you had this follow through, and then this looks like it's going to turn out to be a lower high, right? I mean, we'll have to see. We're not here to make predictions. We're going to watch the price action, but that's what the setup looks like, right? Like it looks similar to this thing, except this was obviously a much shorter rally. So that's the daily cycle update. What does the weekly cycle look like, right? And so just to be clear, it looks like we're in for a lot more of a decline here, right? To make a lower low below this, we'll bounce again, make a lower high, etc. On the weekly cycle, the week of November 14th was week 24. and then we almost made a swing low. And that's why it's important to understand like how candles change, in real time. So at one point, this candle from last week was green, right? We know that because of this wick up here, right? And that was that rally we talked about that petered out on Monday. We've since broken down, and what we didn't do is made a lower low yet. So to be clear, when a candle makes a higher high and then it goes red, your expectation is that it will potentially make a lower low as well and then become a bearish outside candle. We didn't have that happen yet, but my suspicion is we get that, like you get like a continuation candle for this coming week, right? Like you imagine something like this, right? So we didn't get the lower low on the week itself, and that is sort of poorly placed, but like that, right? So you imagine it kind of finishes the job, and then these two, if you combine them together, become an outside candle. And that is the way to kind of think about it. And so this could be our weekly cycle low, and then we could just be starting another bearish weekly cycle that rolls over, or maybe we're declining into a longer weekly cycle, like this one was 33 weeks, for instance. It doesn't really matter, right? The point is this is a downtrend on the weekly chart as well, and I'll draw that out the same way we had that downtrend on the weekly, on the daily. It's the same thing here, right? We made a low, then a high, then a low. Now we're making a high, like, right? And so you would expect a lower low, lower high, lower low, lower high, right? And my expectation is we get down to around the 104, 104 and a half level, right? Like that's the logical area. That's the logical pivot that this is seeking out, which is this line here. We're not very far from it now at this point, especially in percentage terms. And so let's flip over to UUP. We'll look at some of those levels. Again, that's the ETF that tracks the Dixie. So when the Dixie is going higher, this ETF is going higher. So on the daily chart, you can see this is that same pivot level, right? So on the daily chart, the level that we're talking about breaking down below is $28.52. Wait, is that right? I think, yeah, $28.52 is the level. That's this low, the low from this candle here, which is, yeah, $28.52. We're not very far from that here. You can see Friday closed, almost made a new low, but didn't quite. And if we look at the weekly chart, right, I mean, this is your classic bear flag, right? And the pivot that's calling out to us on UUP is right around $28 even. And then you have another kind of obvious pivot around, call it 27. And so as I talk about, the implied volatility on the options in general for UUP are very, very low. So it's very cheap. And you can see those are the same levels kind of on the monthly. And so this is how I'm playing this decline using puts in UUP. So now let's switch over to those currency pairs I talked about, because those are going to have a very material impact on the performance of the Dixie. We'll look at the euro first. And so for the euro, if we look at the daily chart first, we can see that we made an important low on the daily back here on September 28th, right? And generally, this is going to kind of inverse coincide with what's happening with the Dixie. We then kind of had this move that like we kind of chopped around here, and then we started to move in earnest up here. We've held this higher low, and then we're moving up. So we're clearly in a daily uptrend. And what does that mean in reality? On the weekly, it means we're on week 8 of a new weekly cycle. So that's important because Dixie is getting close to an ICL, so it's getting close to a weekly cycle low, or we presume at some point. And that would mean that the euro is probably going to have a weekly cycle high at some point. Now, last week was week 8, so Monday, the 29th, starts week 9. And notice we actually do have a swing high here, or excuse me, we have a high that we need to get above. Otherwise, this could become our swing high, and we could have our top on week 7. Too early to say that's going to happen yet. And in terms of, I'll do a separate video about the euro itself, just in more detail. But that's kind of the big picture view, that we have this rally going. It's week 8. And if we look at the monthly chart, we have a bullish swing low in place, right? So just to be clear, we made a low in September. Then October, we consolidated. So it was an inside month. And now in November, we're making a high above that month. And we're actually going above the high from September. So to be really clear, this is actually, I'll get rid of these. I was just doing some analysis earlier. This would be technically a low on month 30 of a longer term cycle, right? And so I was just doing some quick back of the envelope analysis here. This looks like our last major, like long-term cycle low on month 38, right? And then we had this rally for 10 months. And then we had this double top situation, right? We didn't make a higher high. That was a double top on May 2021. And we've been declining ever since, right? So just you can do the math, right? If this is month 30, if September, I should say, was month 30, we topped out on month 20, it means we had a 10-month rally and a 20-month decline. Pretty brutal. So could this be a long-term cycle low for the euro? It's possible. And it could be that this is a long-term cycle low for the euro, even without it being a long-term cycle high for the Dixie. That's going to be important, and we'll look at that when we talk about the 3-year cycle for Dixie. And so that's the euro. Definitely looking bullish, at the very least short term. If we look at the British pound, similar situation here. Very clear uptrend on the daily chart. You can see holding higher lows here, and what that means for the weekly. So I believe this is also week 8. So 1, 2, 3, 4, 5, 6, 7, 8. Right. The British pound on the other hand, remember when we looked at the euro, it hadn't made a new high on the weekly chart. So week 7 is actually our high. For the British pound, week 8 was our high. So it's stronger than the euro technically. It's a smaller weight than the euro. I think it's like 12% or something like that, in that ballpark. And on the monthly, you have a similar kind of the same thing as I drew here. You have your monthly swing low. And I believe this is trying to make a quarterly swing low as well, right? So not quite there. And we'll talk about that when we talk about the 3-year cycle for Dixie for sure. So that's the British pound. So they're both, not super early in a weekly cycle. And it's been a relatively strong weekly cycle so far. The Japanese yen is the fly in the ointment. And so for this one, we're going to look at the Japanese yen versus the dollar. And so this is, this you're going to see is actually a little bit more tenuous than the than the euro and the British pound. So in this case, we also have a little uptrend on the daily chart. You can see it's much earlier, right? So we've been rallying on this daily chart for how long? Let's see. So about 25 days, right? Whereas the other ones are pretty long. And if we think about what does that mean for the weekly, it's only week 1, 2, 3, 4, week 5, right? So week 6 will start on Monday, whereas it'll be week 9 for the euro and the British pound. That's important divergence, right? And you can see there were feeble little rallies, right? Like this little rally lasted 3 weeks, barely got to the 10-week moving average. This one lasted like 3 weeks, poked up above the 10-period moving average and really just consolidated there before collapsing. So this is clearly a stronger rally than any of these last 2 feeble attempts. I mean, you have this really strong candle that we're kind of holding above. And so this time may be different, right? We may be getting a little bit more of a stronger rally. And keep in mind, the stronger these 3 things are, the euro, the British pound, the Japanese yen, the more pressure that is on the dollar, right? It implies more of a downtrend for the dollar. And so let's turn back to the dollar and let's think about that longer term cycle. So we'll use the monthly chart as our starting place. And again, the big thing here is we have a monthly swing high in place by going below the low from September. Does that sound familiar to you, though, the low from September? And if we just flip back to these other charts really quickly, September was our low for the euro. September was our low for the British pound. And, of course, I'll just add the JPY. That was also our low for JPY versus USD, right? Well, actually, that's not true. October was. So again, that is much weaker than the other two, the Japanese yen. But it's, again, as I talked about, that inverse correlation. So the low from that month, from September, is 107.68. So as long as we stay below that level, we have a monthly swing high in place, right? We already closed. Well, actually, we haven't closed November yet. So once we close November below that level, and it looks like we're going to, right? We could get a massive rally the next couple of days, obviously, but the odds are against that. We would close as a monthly swing high, and that would increase the odds that the 3-year cycle decline has started. But what would really tell us that we're getting a 3-year cycle decline is if we break down, I'll go back to that chart below this level, right? So imagine we have a September candle that continues the bearish, a December candle that continues the bearishness and does something like that, right? That would, and then importantly, closes below this level. So that level specifically is 104.636. And I've been saying on Twitter, just call it the 104.5 level. 104 and a half. It's a zone, not a specific level. But in this case, going below that level would give us a quarterly swing high. That's a really big deal, especially if we close the year with it. We close the quarter. The quarterly candle closes in December, obviously. And if we look at what that would mean, right, that would mean us moving. So this is a quarterly candle now with the Dixie. You can see this furious rally. This was our 3-year cycle low here, and we've just been rallying. That was your top on month 20. And again, this is just your quarterly view. You can see just nothing but green candles since a little bit of a wobble in early 2021. Now, if we close below that, again, this candle would extend lower and close below this line. That would give us a quarterly swing high, just like this quarterly swing high from 2001 and this quarterly swing high, this big one in 1985, right? This one in 1985 led to a 50% decline over several years. This one led to a 36% decline. Let's just say we were going to come down to the 80-ish level. That would be a 23% decline from that swing high. Now, it doesn't mean we're going to get there. If anything, maybe a more realistic level is around here, right? That would only be a 14% decline. Now, obviously, we've already declined quite a bit from here. But this helps you to put things into perspective, right? That we're standing at the precipice of a big moment here. Now, if we are able to stay above that swing high, that tells you something important too. That means you're setting up a false breakdown on the monthly level that would be bullish and send us kind of skyrocketing the next level. When you look at this and you see this kind of rally here for so many quarters and this rally here for so many quarters, it's very possible that this is just going to become a higher low and we're going to just keep trending higher. That's why we don't want to get too bearish, right? If we get that close below that level, though, that 104.68, that is spot 636, excuse me, that is really telling, and that's something that sets us up for a really ugly 2023, right? It sets us up for a 2023. I'll take off these drawings, right, and I'll just add a 12-month candle. So actually, I'll have to add the drawings back. So if we get rid of these percent declines for a second here, and we just think about what 2023 is going to look like, no matter what, we're going to have an inside candle to start the year, right? We know that for a fact, right? That's to say, sorry, something crazy could happen in December and we can make a new high. That would be going above 114.778, or we can make a new low, which would be going below 94.629. I mean, I guess that would probably be more likely than making a new high, if anything. But so we're probably going to stay inside this range that we're in. This is your 2022 candle. So you imagine when the 2023 candle opens, it's going to be something like that, right? Somewhere inside this ginormous range. And then what you're really talking about is which side of the range are we going to take out? Because that's how price action works, right? We can't stay inside a range forever, right? That's a temporary phenomenon that has to break down at equilibrium at some point. So your real question is, are we breaking down to the upper end of the range and we continue the bullish move? Or is this structure going to break down, right? Which would mean we break down, sweep these lows. We've already looked at this on different time frames. This is the consolidated rolled up view on a yearly chart. But huge implications here, right? So really we're going to start the year as an inside year, kind of uneventful. And then we're going to watch it really closely. Are we moving towards the upper end of the range or the lower end of the range, which would mean, upper end is a bull flag, lower end is a bear flag. And if we have a 3-year cycle top in September 2020, then we're obviously going to drift to the lower end of the range, probably make a low below 94, that 94 level, which was our low for 2020, kind of break down this structure. The same way this structure broke down and this structure broke down, right? This is obviously the consolidated view of that quarterly chart that we were just looking at, right? So that's the lay of the land here. And the other thing I will note is that this obviously has big implications for many other asset classes like commodities, just risk assets in general, right? They tend to be highly correlated with the Dixie. So we'll be watching this very closely on this channel, giving regular updates and also giving more timely updates on Twitter as things happen in real time. where there isn't time to kind of make a video, for instance. So if you're not following, definitely take a look at the link in the description. But thank you for watching this Dixie update for today, and we'll leave it at that. Thank you.